It's unusual to hear about a Wall Street megabank losing billions of dollars on a business venture. Even less commonly does a company as powerful as Goldman Sachs find itself being bullied by a rival in its own backyard. But that is the way things are shaping up for Goldman Sachs' consumer banking venture. 7 years after first venturing into consumer banking, Goldman Sachs has won big in 2019 by teaming up with Apple to issue the Apple credit card. A $2 billion pre-tax net loss on their consumer-facing segment for 2022 brings their total losses on the consumer banking business to close to $4 billion over the past 3 years. This is despite the fact that they have a history of 150 years as the master of financial engineering and risk management. Welcome back at Financial Fortune, your daily advisor that gives you news and tips for financial success. Just keep on watching.
A big debut expected tomorrow for the Goldman Sachs initial public offering.
And I believe we share the conviction that this is in the best interest of all Americans.
We still, like all businesses, have to change and evolve.
Goldman Sachs, one of the top investment banks in the world, with a history of making money envied on Wall Street. It's the biggest of the old investment banks, with almost $1 trillion in total assets.
The allure of working at Goldman Sachs is that potentially you could be one of the people running the world.
Much admired, much hated, and, the best risk managers on Wall Street.
Everybody wanted to be like Goldman Sachs or copy it in some ways.
Although it hasn't been able to climb back to its 2009 peak. It's a bank that emerged from the financial crisis relatively unscathed financially, but its reputation took a beating.
And you want people to trust you.
From the cream of the crop to the vampire squid, now the company is targeting the regular consumer.
Goldman Sachs is going from caviar to cheeseburgers. For 150 years, Goldman served the most important people in the world, heads of state, heads of corporations, millionaires, billionaires, and now they're also serving you, the consumer.
Apple Card. Apple unveiled its first credit card, called Apple Card, in 2019. Credit card issuer Goldman Sachs was involved in the launch of the card.
But we want to take the Apple Pay experience even further. And we saw an opportunity to transform another fundamental method of payment, and that's the credit card. Now, with the success and momentum of Apple Pay, we've learned a lot about credit cards. While we all need them, there are some things about the credit card experience that could be so much better, like simplifying applications, eliminating fees, lowering interest rates, offering clear and compelling rewards, and of course, providing the security and the privacy that people have come to expect for Apple Pay. By bringing together our hardware, software, and services, we're going to do all of this and so much more, changing the entire credit card experience. Today, we're introducing a brand new service, and we call it Apple Card. Apple Card was created by Apple and built on principles that we stand for, like simplicity and transparency and privacy. To tell you all about Apple Card, I'm very pleased to invite up Jennifer Bailey, Vice President of Apple Pay. Jennifer?
With Apple Card, we have completely rethought the credit card. A new kind of card that takes advantage of everything iPhone offers, is designed for a healthier financial life, and sets a new level for privacy and security. Apple Card is designed to take advantage of the power of the iPhone. This means it can do all sorts of things that no other credit card can do. For starters, you don't have to wait days to get your card. Just sign up on your iPhone, and in just minutes, you get your Apple Card and you can start using it right away. You can use it worldwide, anywhere with Apple Pay, in apps, in stores, on the web, and your Apple Card will be available across all of your Apple devices. Apple Card is also always with you because it's in your iPhone, in the Wallet app. And the Wallet app has completely new capabilities. So you can see everything you need to know about your Apple Card, like what you've spent, how much you've spent, where and when your payment is due. We've also made it really easy to get help. With Apple Card, if you have a question, just text us right from Messages. Everything from getting details on a transaction to letting us know your new address. It's as easy as messaging a friend. Next, we've taken on an important challenge with Apple Card to help everyone live a healthier financial life.
Apple hoped to use their devoted customer base to break into the lucrative consumer finance market. A partnership between the two companies seemed like a match made in heaven because both Goldman Sachs and JP Chase were eager to capitalize on their Wall Street reputation in order to strengthen their respective new consumer banking ventures. Even though Apple and Goldman Sachs had an Apple Card arrangement, it was significantly one-sided. The original terms of the partnership ensured that the Apple Card would be accepted by the greatest number of iPhone buyers as possible. The card had low interest rates and no fees. Apple benefited greatly from these terms because it allowed the company to provide iPhone users with the best service possible. But for Goldman Sachs, that meant high risk and low reward, two things no bank ever wants to hear. Goldman Sachs' consumer banking division has a much lower credit score than its megabank rivals, Bank of America and JP Morgan. Apple only cares about providing the best user experience possible for its customers so that it can sell more iPhones and increase its market share, unlike some of its competitors whose cards charge fees and carry low interest rates. Since Goldman is on the line for any losses incurred by the Apple Card, Apple has leverage in negotiations despite the questionable financial viability of the product. To put it another way, they put Goldman in a position where he had to pick up nickels in front of a steamroller. As a matter of fact, Apple's terms were so unfavorable that several other banks, including JP Morgan, Citi, and Barclays, declined to partner with Apple on the Apple Card. But when you're truly down and out, you might do what no one else would. Massive and growing losses are the end result of all of this. Goldman's platform segments, which include Apple Card, incurred a pre-tax loss of nearly $2 billion in 2022. That's a significant increase from the $800 million loss in 2020 and the $1 billion loss in 2021. The entire net income for Goldman in 2022 was roughly $11 billion. That means the Apple Cart lost about 20% of its money before taxes. Solomon's legacy.
I think people are concerned that the capital markets environment is going to be less robust going forward in 2022, 2023. But we, as we stated last week when I was down in Miami at our investor update, are extremely confident that we can deliver over the next 3 years mid-teens returns for our shareholders. And we're executing our strategy. And our strategy is working, Jim. I mean, we are focused on clients. We're focused on operating with real excellence, and our strategy is working.
But is it possible that last year was as good as it gets, and even with the strategy working, you cannot replicate what you did in 2021?
Well, I don't think we'll replicate what we did in 2021 and 2022. There are a number of people that said the firm could never earn over a 20% ROE ever again, and we did. I'm not saying we're going to do that next year. In fact, I don't believe we will. But it's a long road, and what we're really focused on for our shareholders is the consistency of returns over time, the durability of returns over time, and compounding our book value. I think book value growth underpins the value of a financial institution like ours, and we've shown over a very long period of time that we can grow our book value on a comparative basis. It's very attractive.
But
relative
1 in
to other
5, 10
institutions.
years, you've led in book value.
We've
yet
led
your
in book
stock
value
has
growth.
underperformed 3 of the major banks. If your thesis is true, how can that be possible?
I think people, and this is one of the parts of our strategy, we are diversifying our mix. We're adding more asset management revenues, which is in the form of predictable fees. We're adding more wealth management, which is in the form of predictable fees. We're adding a digital consumer business, which basically takes lending book, which adds a predictability level to the overall mix of earnings. Capital markets revenues are hard to predict in every given year, and the market's clearly saying they'd like a more diversified Goldman Sachs, and so we're moving in that direction.
Well, let's talk about some of the capital markets, which many people are concerned about. IPO market, there's only one small deal this week. SPACs, which were really, really lucrative for Goldman Sachs, seem to be dying off. At the same time, Russia, Ukraine, and Fed tightening. Isn't this a mixture that is too hard to be able to, even for the first quarter, say that the consistency is going to be there?
Well, there's no question that equity activity has come down meaningfully. I think if you look at the volumes, as off the top of my head, so don't hold me to it perfectly, equity volumes are down approximately 60%. But M&A volumes are still pretty active. The backlog's still strong. Debt volumes are still relatively active. So I think you have to, when you look, I'd say the activity levels feel better than 2019.
Okay.
But not as good as 2021. And so when you look at our banking business does not have to look like it looked last year to be a very good return contributing, good earnings contributing business. And clients are active because of what you said. There's a lot going on in the world. People are transitioning to a world where inflation is above trend. There's geopolitical risk in the world. And so with that activity comes opportunities for us also to serve our clients.
You are client focused. What are you saying to them?
Well, the particular clients that have been focused aren't clients of Goldman Sachs, to my knowledge. But we'll watch with everybody else. I think it's early, Jim. I think this is the first step in a process. I think the market the market expected something, and I think they got something on the lighter side of what the market expected. But we'll see how this all unfolds. It's early, and we're watching it closely.
Goldman became fixated on expanding its client base to include the general public. The bank's decision to abandon its consumer banking venture will likely be met with relief from its investors. Goldman will remain one of the best managed investment banks on Wall Street, generating annual profits in the billions. However, the company would be wise to focus on its core competencies. Okay, this video has reached its conclusion. What do you make of Goldman's forays into retail banking? Do you agree that Apple took advantage of them? Leave a comment down below and let us know. Meanwhile, I appreciate you tuning in and hope to see you in the next video here at Financial Fortune.